Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields. Another day higher, something we haven't seen in quite a while. So we nudged higher, got as high as 288 in the 10-year yield, just south of 290. But 290 is a level we haven't traded above in about 3 weeks. So this is still kind of, we're moving back to the mean, back to the middle of the range, that 280 to 3% range we've been talking about. Not much has really changed here. We had some issuance this week, 2 and 5 year already, 7 year on the way tomorrow. And it seems that this is going to be kind of one of those supply weeks, which is nudging yields higher. Yeah, we've had some modest, better news, but nothing that would really change what's happening here. We failed to bust below 280. Similarly, the way we failed to push breakout higher from 3%. So that 283% level is holding technically, and we're just moving back to the middle, which means it's likely going to take some kind of a catalyst to nudge us one way or the other. And if you look at what's happening in market volatility, it is, again, eerily sideways. Not seeing a decline in volatility, which would typically happen as you trade back towards the middle of the range, likely due to the uncertainty we're seeing around trade and whatever else it could pop up in the media or geopolitically. It seems that there are still some issues. Market volatility, again, not buying what the euphoria that we're seeing in the stock market. And lastly, let's look at that curve. We've talked about 2s, 10s. It got below 20. It traded below 20 for 3 straight days. Now we're back above 20, actually above 21. But it seems to me it's a little too early to break out the party hats. I think that the curve will continue to reflatten again. Don't forget we have Fed rate hike expectations here, 100% for September and very high for December. And if you think that the 10-year yield is going to be rallying at the same pace, well, you're probably mistaken, given the fact that all this uncertainty and all these shorts have been unable to push 10-year yields above 3%. So unless something dramatic happens and there's a huge, massive unwind of real money getting out of their longs, it's going to be very difficult to see that curve re-steepen with any significance. So the curve remains eerily flat. We continue to see yields creep higher over the last day or so. And again, we have a key news, key FOMC coming up September. That will set the table for the fourth quarter. Likewise, if that yield curve gets any flatter, I think the Fed is going to have to start explaining it a little more. We heard from Treasury Secretary Mnuchin today that is not an issue. Flat yield curve is not something he's concerned with. But he's not the one setting monetary policies. Right now, we're sitting in the middle of the range in the 10-year. This is Todd Colvin coming to you from the floor of the CME Group.